Good afternoon, investor and corporate. Welcome to SET Digital Roadshow, third quarter of 2023 performance review. This session will run about 45 minutes, including Q&A. Company will start the session by 30 minutes presentation, followed by 15-minute Q&A. During Q&A, investor may leave your question in the meeting chat box or use raise your hand function. We will open your microphone so you can ask the questions to the company directly. May I now invite AAPICO HITECH Public Company Limited to start the presentation. Thank you.
Good afternoon, everyone. Welcome investors, analysts, and shareholders. Today, we are here to share our third quarter 2023 results of our company. Joining us today is Mr. Yep Soo Chuan, who is our President and CEO. And I'm Pochari Busratepkul, Senior Financial Controller. For the agenda today, we would start with the company's general information and financial performance for third quarter 2023. This will be followed by an automotive industry overview, strategy and direction, electric vehicle, and Q&A sessions. Our company was established in 1996 and was listed on the Stock Exchange of Thailand in 2002. And currently, the major shareholders is Mr. Yep Soo Chuan's family. He is the president and CEO as well as the founder of our company, which along with his family currently holds 39.21% of total share outstanding. Our company has 48 subsidiaries and associate companies around the world, divided into 33 companies in Thailand and 15 companies overseas. Our companies operates in three main businesses, includes automotive part manufacturing, which contributes around 73% of sales, car dealership business, which contribute around 27%, and IoT connectivity and mobility business, which contribute less than 1%. AAPICO has upgraded its credit rating from TRIS, moving from BBB+ to A- as of June this year. The company has also received an excellent score for corporate governance for 3 consecutive years and has been selected to be included in the Thailand ESG Index. Also, AAPICO has been chosen by the Thai Part Institute to be part of the ESG 100 list for the year 2022. And as of November 24th, our company has the market capitalization of 10.1 billion baht. We have operation based in Thailand, Malaysia, China, Portugal, and India, with offices in the UK, Germany, Singapore, and Taiwan. And in terms of the revenue by geography, the highest contribution comes from our operations in Thailand, accounting for 65%, followed by Portugal at 14%, Malaysia at 16%, and China at 5%. For the 9 months of this year, the sales growth rate in Thailand was 15.5%, while in Portugal it was down like 0.1%. In Malaysia experienced a growth rate of 18.5%, and China saw a growth rate of 18.8%. Most importantly, our main business is automotive part manufacturing, which contribute like 73% of sales. And our company and subsidiaries have the operation based in Thailand, Portugal, Malaysia, and China. And we classify automotive parts into 5 types, include metal forming parts, plastic parts, forging and machining parts, casting parts, and tooling. The first 4 product types are mass-produced with high volume. Jig and die, on the other hand, are low-volume products that are produced only when a new model is launched. Regarding joint venture and technical partnerships, we have well-established business alliance with partners that are leaders in their respective technology domains. Some of our partners include MAN, Sano, Sumino, HR, Lamtech, and others. Additionally, Cortec serves us as a technical partner for fuel tanks. In terms of our customer base, we manufacture automotive parts for a wide range of car manufacturers. For the first 9 months of this year, Isuzu, for which our major product is the chassis frame, accounted for 23%. This was followed by Dana at 8%, AAM and AAT at 5% each, Ford and Continental at 4% each. For our car dealership business, the revenue is around 77% of our total sales. We operate across Thailand and Malaysia with a combined of 17 showrooms, 11 showrooms in Thailand and 6 showrooms in Malaysia. Our Thai dealership features Mitsubishi, Ford, Mazda, and MG. And starting in December of this year, Chang'an will replace Mazda showroom, while Honda and Proton are represented in Malaysia. For the brand contribution for the first 9 months of this year, Honda leads with 32%, followed by Proton at 22%, Mitsubishi at 20%, Ford at 16%, MG at 9%, and Mazda at 1%. Next is our IoT connectivity and mobility segment. The contribution is less than 1%. We focus exclusively in Thailand, and our expertise spans smart location services, including location-based data and digital mapping, as well as extensions into smart mobility, smart factory, smart logistics, smart office, and smart farm analytics. For the revenue distribution in the first 9 months, Smart Factory takes the lead with 59%, followed by Smart Location at 22%, Smart Logistics at 17%, Smart Mobility and Smart Farm at 1% each. And next is our financial information for third quarter of this year. For our top line growth, you could see that our revenue increased by 3.2% compared to the previous year and reached 7.5 billion baht. The growth rate surpasses the industry average, which declined by 6%, and our EV components revenue has also experienced consistent growth. For the gross profit margin, our gross profit margin increased from 11.1% in third quarter of last year to 11.7% in third quarter of this year, thanks to the higher orders, new products, and continued order from overseas customer for automotive part manufacturing business. For SG&A, we experienced a slight uptick of like 0.2%, from 55 million baht to 457 million baht. Even our revenue increased by 3.2%, and the ratio of SG&A's expenses to the revenue improved from 6% to 5.9% in third quarter of this year. And for our core operating profit, reached 618 million baht in third quarter of this year, and this is 5.5% increase from third quarter of last year, which was around 586 million baht. And the increase in core operating profit was mainly due to the increase in volume and also the product mix of automotive part manufacturing business. And the gain on foreign currency exchange rate was 69 million baht compared to the gain of 175 million baht in third quarter of last year. And this change resulted from the depreciation of the Thai baht. And this gain on the foreign currency exchange primarily related to the US dollar loan we gave to our subsidiaries company named SGAH, and it was a non-cash in nature. And for the share of profit from investment in associates and joint ventures was around 81 million baht in third quarter of this year compared to 152 million baht in third quarter of last year. And the reduction mainly came from the following reasons. First is no share of the profit from Hyundai Motor Thailand, which we hold like 20%. This company stopped the business operation since Hyundai Motor Group has started the business operation in Thailand under the Hyundai Mobility Thailand since 1st of April this year onward. And the company has invested in a newly established joint venture company, namely AAPICO in Thailand and Malaysia. And Malaysia operation just started the production in late of September, while the Thailand operation will start the production at the end of this year. Therefore, AAPICO still report a launch cost during the pre-opening period. And for the net profit, our net profit attributable to equity holder was 501 million baht compared to the net profit of 601 million baht in the same quarter of last year. And the net profit margin decreased from 8% to 6.4%, mainly due to the decrease of the foreign exchange gain of 106 million baht. And some part of it came from the reduction of the share of profit from investment in associate and joint ventures amount of 72 million baht, and also higher finance costs and tax expenses. If we look at our core net profit, we could see that it was improved from 426 million baht to 432 million baht. And exclude the gain and loss on foreign exchange, our core net profit margin reached 5.6% in third quarter of this year. The decline in core profit margin was mainly due to the decrease of profit sharing from our associate and joint ventures. If we exclude this profit sharing from our net profit, you could see that the profit has improved slightly from 274 million baht to 351 million baht. And here is our performance by quarter. For the top line, as mentioned earlier, our sales for the third quarter increased 3.2%, and our sales for the first 9 months increased 12.6% and reached nearly 3.3 billion baht. And this increase mainly came from the growth of automotive part manufacturing business. And our gross profit margin also improved from 11.1% to 11.7% in third quarter of this year. And the gross profit margin for the first 9 months also improved from 10.8% to 11.8%. In terms of our EBIT and EBITDA margin for the third quarter, our EBIT and EBITDA margin stood at 7.9% and 12.3% respectively. And for the 9-month period, our EBIT and EBITDA were at 7.9% and 12.1%. And for the net profit, our core net profit, which exclude foreign exchange and also one-time items, reached 432 million baht in third quarter of this year. And for the 9-month period, our core net profit margin stood at 5.7%, which improved from 5.5%. For our OEM business, you could see that our sales increased 6.7% and reached 5.5 billion baht in third quarter. And the sales for the first 9 months increased by 12.1% to 16.6 billion baht. And the sales increase mainly came from higher order, new product launch in third quarter last year and now exported to Argentina and South Africa, in addition to the production for Thai market at the start. And also the continued order from overseas customers and management effort to diversify into higher value product range are the main driver for the higher revenue. We report growth in all our key markets. Thailand, Portugal, and China grew like 3.6%, 7.1%, and 12.7% year-on-year respectively. And EBIT margin for third quarter of this year was at 10.7% compared to 11.2% in third quarter of last year. And EBIT margin for 9 months was at 10.3% compared to 9.4% in 9 months of last year. Excluding the FX and one-time items, third quarter of this year EBIT increased 27.7% from 410 to 524 million baht, with an EBIT margin of 9.4% compared to 7.9% in third quarter of last year. And for the first 9 months of this year, EBIT rose 42.7% from 1,096 million baht to 1,564 million baht. And EBIT margin for the first 9 months increased to 9.4%. For our dealership business, the sales slightly decreased by 1.1% to 2.1 billion baht in third quarter of this year. Higher sales in the dealership business in Malaysia was driven by the opening of the new Proton showroom in October of last year and also Proton's new model launch during this year. However, the increased sales of Malaysia operation was offset by the lower sales of Thailand dealership due to the tighter lending policy of auto financing provider. And the sales for the first 9 months of this year increased around 17.4% to 6.2 billion baht, driven by the opening of Ford and Proton showroom in Thailand and Malaysia. And EBIT margin for third quarter and the 9-month period of this year stood at 1%. In terms of the financial indicators, the return on equity and return on asset as of third quarter of this year reached 18.7% and 7.3% respectively. And the interest coverage ratio also improved to 6.5 times, surpassing the 6.3 times of the third quarter of last year. Additionally, the interest-bearing debt to EBITDA ratio show an improvement, decreasing from 2.6 times in third quarter of last year to 1.9 times in third quarter of this year. And these ratios have consistently enhanced over the past year due to the improvement in our profitability. And as of September of this year, our interest-bearing debt stood at 6.9 billion baht, which decreased from 7.5 billion baht as of December of last year. And both the interest-bearing debt to equity and total liabilities to equities ratio have improved to 0.6 and 1.3 times in third quarter of this year. And our long-term debt to EBITDA ratio has steadily improved from 1.4 times in third quarter of last year to 0.5 times in third quarter of this year. This enhanced ratio enhance our ability to secure funding for potential new business opportunities. And for automotive industry overview, in third quarter, the total vehicle production volume for Thailand saw a drop by 6.1% to 464,000 units compared to 494,000 units in third quarter of last year. Domestic demand for third quarter dropped by 12.1% to 181,000 units due to stricter auto loan approval processes by the financial institutions, particularly for pickup trucks, amidst rising household debt, higher interest rate, and weakened purchasing power among customers. On the other hand, export volume increased by around 14% to 293,000 units. And the primary export markets include the Middle East, Europe, North America, Central and South America. And from the January to September, the total vehicle production volume increased by 1.7% to 1.4 million units. However, the domestic demand decreased by 7.4% to 587,000 units, and export volume increased by 16.4% to 822,000 units. The Federation of Thai Industries has revised the car production forecast for this year to 1.85 units, which were divided into production for exporting of around 1.05 units and production for domestic sales of around 800,000 units. And the revise was mainly due to a drop in domestic car sales and increase in imported electric vehicle from China. However, the export sale is well on track to achieve the target. And for 9 months of this year, total industry volume for Thailand, Toyota maintains the highest volume, followed by Isuzu and Honda, and domestic sales volume has decreased by 7.4% due to the decline of the sales in most brands except the Honda and Ford. And this decrease can be attributed to the increase of restriction on the auto loan approval by financial institutions. And for the car production for European market, the total vehicle production during third quarter exhibited a notable 6.3% increase and reached 3.9 million units. And the total vehicle production during 9 months exhibit 13.2% increase and reached 13 million units. For the China automotive industry, the car production during third quarter increased around 4.1% and reached 7.8 million cars. And the car production during the first 9 months increased around 7.3 units and reached 21.1 million units. And the increase can be attributed to an increase in electric vehicle purchase, and the sales of the new energy vehicles are experiencing rapid growth. And during the same period, the domestic car sales increased 5.6% to 7.8 million units. And for the 9-month period, the sales increased 8.3% to 21.1 million cars. And for the export volume in third quarter of this year, show an increase of 37.6% to 1.2 million units. And for the period of 9 months, there is an increase of 59.6% to 3.4 million units. And for the total industry volume in Malaysia, for the 9-month period, the total industry volume increased by 11.3% and reached 566,000 units. And the increase in sales was mainly driven by the national brands. And the MMA forecast the car sales for this year to reach 725,000 units. And for the period of first 10 months, the car sales reached over 88% of the full year estimates. For our strategy and directions, currently we have production base in Thailand, Malaysia, China, and Portugal, along with the production base via our associates company in India. And we are still looking for opportunities for a growth in the USA as well as in Japan, are major customers of our company. And regarding our company strategies, our focus extends beyond the Thai zone. We are seeking for growth opportunities in the global market as well. It's evident that Thailand car production comprises only around 2% of the total global production volume. And there is a lot of opportunities in global market. And as shown in the graph on the right, the global car production is projected to exceed 90 million cars by 2025. And here is our key milestone. I will focus only on the year 2023. For this year, we acquired 60% of the shares in the companies called AAPICO AV, which is the partnership with Proton. And this year, we also was upgraded the credit rating from BBB plus to A-. And we also established a new dealership named Able EV in Pathum Thani, Thailand, which operate Chang'an dealership in fourth quarter. And for electric vehicle, From the graph on the left side, the global passenger EV sales are expected to grow rapidly from 10.5 million in 2022 to 75 million in 2040. And China is expected to remain the largest EV market in the world, accounting for approximately 20 million of sales in 2040. And from the graph on the right-hand side, EVs are projected to make a significant impact on the global passenger vehicle market, achieving a market share of around 44% by 2030 and 75% by 2040. And impact from electric vehicle. There is no significant impact on AAPICO business in both short-term and long-term, as most of our metal forming parts, plastic parts, and forging and machining parts will continue to be utilized in EV vehicle. Additionally, we have a strategic approach in place to manufacture parts specifically tailored for EVs. While there is some disruption, but it is minimized in our case due to the diverse range of the products we offer. Only the components part, like engine parts and fuel-related elements, such as the fuel tanks, will undergo replacement in EVs. These parts contribute to approximately around 5% of our revenue. And the picture on the left shows the frame of the EV pickup truck, while the figure on the right shows the axle designed for EV. And here are the parts we manufacture for EVs and HEVs. For the current EV parts we manufacture in Thailand, we produce truss panel and body panel for VinFast SUV model, which include VF8 and VF9, and produce half shaft for Jaguar I-Pace, half axle for Form 1. And for HEV parts, we manufacture the battery case frame and draft shaft for Hyundai HR-V. We also produce the bracket assemblies and breakover supplies for Toyota Camry Hybrid, and also the battery case frames, washer system, radiator tanks, and drive shaft for Nissan Kicks. Additionally, we manufacture protector battery covers, bracket wiring supports for Toyota Hilux Revo Hybrid, and washer system, as well as tank acid vacuum for Mitsubishi Xpander. We also manufacture lower arm suspension for Great Wall Motor Hawan Joe Lion, and also the parts for Great Wall Motor Tank 300. And for EV parts produced by our subsidiaries in Portugal, we manufacture differential cases, brakes, and steering knuckles for various models, including BMW iX, i7, Roadshow pickup, Maserati, Porsche, and Echo. And for the hybrid part we produce in Portugal include the following parts for Volkswagen, Renault, Toyota, Ford, and Land Rover. And in summary, for the automotive industry during the quarter, our revenue and core profit continue to increase and reach 7.8 billion and 432 million. And and also as of November 24, the market capitalization has surpassed 10.1 billion. And for this year, we anticipate a 100% growth in the revenue for our electric vehicle part. And the total car production forecast for this year's indicates an expected decline of around 1.8% for Thailand and growth between 5 to 6% for Europe and 3% for China. And the outlook for this year, we target our revenue growth in range between 10 to 15% and target the gross profit margin in the range of 10 to 12%. And targeted our core net profit exceeding that of last year.
This session has come to the end. Thank you very much, investor and corporate, for joining the conference. If you do need further details, please feel free to drop us an email. Thank you. ขอบคุณมากครับ
ขอบคุณค่ะ